Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, July 20th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the ES and the daily time frame here. One thing that we've been following is the narrow 3-day range that has developed at these highs. You'll notice right here that this 3-day range mirrors or is very similar to the 3-day range we had prior in the first and second week here of June. That led to a major flush back down. We're now right back at the exact same spot with another narrow range. The 3-day range is in. You can see right here we are developing a 4-day range. Obviously today is not done yet. We've got plenty of time here to change the look and feel of this bar here, but we are developing a very narrow range that could lead to the next major breakout opportunity. Again, the fact that we are up here near the key range high suggests that we could see a rejection that could bring us back toward the 30.77 halves. That's the midpoint of that key range. Maybe even back across the range into 22.75s. But at this time, everything continues to be trending higher. The PIMA trigger zone continues to be well intact. Even if we were to drop through the bottom of these 3 or 4 day lows here, we may see a rejection, and that failed new low could give us a very nice continuation to the upside. We've talked about the upside targets that are available to us should we start to see that expansion. High probability targets at 33.85 and 35.38. So we could see quite a bit more upside here, but we are right at a decision point here for the market, and we have to see how this plays out. Now this week we do have a very light economic calendar here. Nothing on the calendar for Monday's session. Tuesday is nothing during the RT8 session. After hours we get the API weekly crude oil stock, and then just very quiet the rest of the week. Next week, however, we do have the FOMC meeting and the Fed interest rate decision. So in about 8 or 10 days here we'll get the next FOMC key level, very similar to the one we got here in June. Initially we got the sell-off away from that level, and then we snapped all the way back to it. We'll get another one here next Wednesday about right there, and that'll give us another important level to work off of moving forward. So right now, continue to watch this narrow range. Everything continues to trend up here, but we got to be cautious to see which way we go, and that could lead to a very nice 3 to 5 day move. Again, got to continue to watch the boundaries of this range. If we take a look here at the NQ, very similar price action. We have a narrow 3-day, 4-day range that's developing right now. The difference on this one here is that this one remains in a very bullish uptrend. Obviously, tech has been the saving grace for this time period in our lives right now, with the pandemic continuing to rage on here. And this chart really reflects that. We have a very clear uptrending channel here. We do have this major rejection day that had developed a few sessions back, and we've held that midpoint barely or thereabouts, right? So we have a very clear understanding of who's positioned where. Now we have to see, can they continue to hold that 10,500? Because a failure to hold 10,500 could run the stops of these bullish participants back down. That could take us back toward about as low as 9,800, the recent pivot low, and that's CLVN. So continue to watch 10,500, 10,525. Any failure to hold that zone could open up a flush down below. But right now, as we continue to hold that zone, everything continues to suggest more upside until proven otherwise. Okay, let's take a look now at crude oil. You'll notice here with crude oil, this one has been mostly dead, just flatlined throughout the month. This is very interesting after a very bullish advance that we saw off the $10 lows. We've come up here to $40 and have just sat for nearly 2 months here. So right now we haven't even tested the previous month's high price. We haven't tested the previous month's midpoint. We've only just hovered around the previous month's close, this blue dotted line, and we've just kind of traded around there. Here's the previous high, here's the previous midpoint, the low is way down there, and at the moment we're really flat. Obviously this thing remains in an uptrend, but until we get out of this range, it's really difficult to really engage this market on a swing basis or any kind of directional basis at the moment. It's just really flat and stuck. At some point we may see that move come, but one thing to keep an eye on is going to be that 41. Every time price is pushed above 41, the market has wanted nothing to do with that price, and it has quickly pushed back down. So 41s continue to be the big price there. The day that we do get a breakout, should we get a breakout through 41, it could be a pretty significant day that easily finally takes out the previous month's high. So again, 41s are very important. But right now, as we get stuck in this range, continue to be mindful of the fact that this thing is nothing but chopping here, and we got to continue to watch for an optimal opportunity ahead. And right now, it's very, very difficult to kind of engage this market as it continues to trade within this narrow range. At some point, expansion will bring about a pretty significant move, but we got to continue to be patient with this one. Lastly, let's take a look here at gold futures. You'll see with gold, this one's up about nearly 0.5% right now. This one has stayed mostly above that 1800 level here. Here's 1800. We've had a 2-week trading range that has developed above that level, and obviously gold continues to be trending higher. You can see this clear PIMA trigger zone that continues to be defended as well. And overall, if this starts to get through the 1820 here, as it's trying to do at the moment, we could see more upside here that starts pushing us through that 1830. So again, this trading range is very important. 1800 is very important. This thing continues to trend higher until proven otherwise. Failure to hold 1790 could lead to some sort of a pullback, perhaps as deep as 1760 or 1750. But until that happens, right now everything continues to trend up. Very similar to that 41 in crude oil. Gold is having trouble with 1820. Every time it gets above 1820 here, it's easily been pushed right back down. So 1820 is going to be the pivot to watch early this week. All right, that is it for now. We'll see how this develops the rest of the session and the week. Good luck, trade well, and I'll see you in the trader room.